Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news. Trade reactions to American moves are starting to be felt everywhere. But first, Wall Street is calmer today, with equities posting small rises from yesterday. But new data out shows American consumer confidence has faded a bit in June, with households increasingly pessimistic about their short-term income prospects. Analysts said this suggests an apparent rise in their economic growth in the June quarter was unlikely to last. The American Congressional Budget Office is warning that the sharp, sudden run-up in their federal government debt will mean that the US taxpayer will be paying as much for interest in 30 years as it does then for Social Security retirement benefits, themselves rising fast. Essentially, it's not sustainable and something will have to give or break. And an update to the Case-Shiller Home Price Index shows that gains edged lower in April, a sign that rising US mortgage rates may be putting slight downward pressure on what consumers are able and willing to pay for homes. And Canada is readying quotas and tariffs on imports of steel, necessary, they say, because the American steel tariffs open the door to a potential flood of cheap imports. And in China, they have slapped tariffs on US soybean exports in retaliation for arbitrary American tariff actions, forcing American companies to seek markets elsewhere. But now China has cut tariffs on soybean imports from 5 countries to 0. Competitive tariff moves like this will change the pattern of trade. And a senior Chinese economy minister is warning that growth in his country will slow in the second half of 2018. He says firms should prepare for the worst as both domestic demand slips and trade frictions with the US escalate. In Australia, new rooftop solar installations have reached a record high in May, with more than 130 megawatts installed in the month, continuing a trend of monthly record installations. And the US Treasury 10-year yield is little changed today at 2.88%. The Chinese 10-year is at 3.60%, down 1 basis point, while the New Zealand equivalent is now at 2.93%. That's unchanged. The New Zealand swaps curve will start today lower and flatter. And gold is down sharply, down $9 in New York at just $1,258 an ounce. That's its 2018 low. And oil prices are racing higher in the US, with up nearly $2.50 a barrel today, with the US price now just on $70.50 a barrel. The Brent benchmark is also up strongly to $76.30 a barrel. Together with our much lower exchange rate, this has the potential to bring about $2.20 per litre petrol in New Zealand on a discounted basis. And the Kiwi dollar will start today at 68.5 US cents, down 0.5 cent from this time yesterday. On the cross rates, we're at 92.7 Aussie cents and 58.8 euro cents. That pushes the TWI down to 71.9 at its lowest level in a year. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.